Ola's event. You there? Okay, let's start with Obashala then. Obashala, are you there? Obashala, are you there, please? All right. So I see Nuruddin Anthony and I see Sunday Arikam. So Sunday Arikam, what's your expectation of the event? What do you expect to learn or know? I hope everyone can hear me.
Yes, I can hear you. Good
Great.
morning. Can you hear me?
Yes, perfectly.
My expectation basically is knowing, having a grasp of what's with the non-interest banking, also non-interest commercial paper is about. But firstly, like having a basic understanding of what non-interest banking is about, so then I can do so. Thank you.
All right. So I see another person here, but the person's name is thereabout in numbers. I don't know. Please, can you introduce yourself, sort of? So 727447. 727447. While you do that, okay, if you're not available to do that, Adigun Miriam,
Hola.
what's your expectation of the event?
Hello, good
Hello, good morning. Obashala.
morning.
Yeah, Obashala. Good morning.
Yes, my name is Obashola.
Yeah.
I'm actually a retiree and I've been looking to learn more about Sharia compliant investment outlet that I can put some money into. So this morning I was happy to see the link and I joined the lecture. Thank you.
Welcome, Obashala. So,
Thank you.
Adigun Miriam, tell me what you expect from the event. Adigun Miriam, are you there with us? Okay, if Adigun Miriam is not there, Yasira, can you tell us what you expect?
Sorry, Ami, I'm trying to unmute my mic.
Oh, okay, great. So, what's your expectation of the event?
Okay, my expectation is to know more about the interest commercial paper with Trustbanc. So I just want to know more about it so that they can enlighten me more.
Okay, any other specifics that you have in mind?
No, for now, but if I listen to it and I hear, I can have other questions to ask.
All right, great. Welcome, Adigun Miriam. I have Mahmoud here. I have Sabah here. So I think Mahmoud should go first. What do you expect to learn from this event, Mahmoud? Mahmoud, are you with us? Okay, Mahmoud, I think we lost him there. So Sabah, can you tell us what your expectations are of the event?
Good afternoon, everybody.
Good afternoon or good morning, actually.
No, sorry. Good afternoon, my friend. So I just need to know about your product and to see how it's going to benefit for human beings so that you see how I can log into it.
Okay, great. That's quite straightforward. All right. So I think others are going to join us very soon. So yeah, these are quite really interesting times, and one of the things that most people want to actually do right now is to get ways to diversify their income, to diversify their investments, and ensure that their money works for them. We have the experts here who are going to be talking about what they actually do best and Where else do you want to learn something if not from those who are pros at it? Here we have Tunde Ajani, who is actually um Tunde Ajani. He's the head of non-interest finance, and I'll be introducing him very soon in full. But I must definitely give honor to whom honor is due to. We have three important people or four important people here on this call, and one of them is Mutiu Rukoyat. He's the managing director, Trustbanc Asset Management Limited. And here we also have Temitope Usman. That's the risk manager for Trust Bank Asset Management. And we have Abdulaziz Lawal. He's the executive director on investment for Trust Bank. So I'll be talking about, I'll briefly be reading the profile of our speaker. So you definitely know that whoever is coming here is not just coming to hoodwink you, but to tell you from a standpoint of authority what Islamic finance is. And so Ajani Ibrahim Tunde is an accomplished Islamic finance and investment banking professional, currently pursuing his PhD in Islamic finance at INCEF University, where his research focuses on innovative blended finance models of, or, I beg your pardon, climate action in developing countries. With a master's degree in Islamic finance and banking from University Utara, Malaysia, where he received the Hyung Leong Bank Outstanding Performance Award. Where he received the Hyung Leong Bank Outstanding Performance Award. He brings deep expertise into Islamic finance structures and capital market operations. During his tenure at First Altar Group, he successfully led multiple high-profile Islamic finance initiatives, including providing technical advisory for the 2 billion healthcare note, and he also spearheaded the 5 billion oil and gas Zait Muda Rabba portfolio issuance. His experience with International Islamic Liquidity Management Corporation, that's the IILM, has given him valuable insights into Sukuk operations and Islamic liquidity management at an international level. So whoever is coming here, I mean, Mr. Tunde Ajani is not an ordinary person. He's like a pro at what he does. He is also a certified Islamic financial planner and financial modeling and valuation analyst. He has demonstrated exceptional ability in structuring Sharia compliance financial products and managing multi-jurisdictional funds across the UK, the US, and Canadian markets. His expertise extends to green finance and sustainable investments, making him well positioned to bridge traditional capital markets with innovative Islamic solutions. So he's well-rounded at what he does. So I'll give the platform to Mr. Tunde Ajani to bless us from his wealth of experience on investment without compromise, the strategic role of non-interest investment portfolio. Welcome, sir.
Thank you very much, Brother Murtado. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam wa rahmatullahi.
إن الحمد لله نعمده ونستعينه ونستغفره ونستهديه ونعوذ بالله من شرور أنفسنا ومن سيئات أعمالنا إنه من يهديه الله فلا مضل له ومن يضلل فلا هادي له أشهد أن لا إله إلا الله وحده لا شريك له وأشهد أن محمد عبده ورسوله وبعد. All praises is due to Allah, the beneficent, the merciful, is the master of the day of judgment. It is from him alone we ask for help. We send blessings and salutations to the noble Prophet Muhammad, sallallahu alaihi wasallam, his household, his companions, and those that are on the righteous path to the day of judgment. I welcome you all to this webinar on non-interest investment portfolio with the theme Investment Without Compromise, the strategic role of non-interest investment portfolios. Of course, the webinar in today's session will be exploring how this innovative instrument will create new opportunities in the non-interest finance landscape. It is on this note, I'll start with the ayah from the Quran, Quran 2, verse 188. Allah said, وَلَا تَكُولُوا أَمْوَالَكُمْ بَيْنَكُمْ بِالْبَاطِلِ. Allah said, do not consume each other's wealth unjustly. And it goes further. So again, that's just to create a background on what we are intending to discuss here today, and then have a kind of supporting evidence from the scriptures. So, however, I'm going to be talking about non-interest commercial paper. So again, what do we mean by non-interest commercial paper? The whole process, the flow will evolve around our understanding around what non-interest commercial paper means. But again, before then, we would have to talk about the critical issues that led to development of non-interest commercial paper, especially in Nigeria. And then also, we're also going to have the benefit that you can derive from investing in non-interest commercial paper. And then, of course, how does this differentiate ourselves? How do we differentiate ourselves from the conventional CP that we have in the market? Again, when I dive into the discussion by trying to explain the issues that we have around. I think I'm aware that the audience have a little background around Islamic finance and how it differentiates itself from conventional finance. I think our audience or the investors in Nigeria or Islamic finance in Nigeria had gone to the level where we do not necessarily have to emphasize more on the differences between Islamic finance and conventional finance, looking at the trajectory and the opportunities that the industry has provided for us. Again, if you look at the development, the development, you see that we've got 4 full-fledged banks in Nigeria, and then we've got other windows, and then other offerings, other products that are. I recently before in the last years we've seen conventional banks also trying to meet with Islamic banks and then trying to for them to establish Islamic products. So this would tell us that the growth of Islamic finance is what consumer centric. Again, we'll look at the record that has been achieved through the issuance of Sukuk. Just last month, it was recorded that the first federal government Sukuk that was issued got a full repayment, full redemption, and then the federal government was able to meet its obligation. So we've got many other Sukuk that have been issued after the first one. Of course, I think we're the 5th or 7th Sukuk. However, the federal government, in terms of fulfilling its obligations, and then the direct investment of investors into the real asset has also been established. And then that's why you can see the oversubscription rate in the investment or in the subscription for Sukuk. Again, what is NICP? That brings me back from what we talk about from Sukuk to NICP. It's just a kind of a short-term instrument, alternative to Sukuk. Of course, it's going to be structured in line with Sharia. But I was going to talk about what are the driving issues at the institutional level and both macro level. What are the driving issues for establishment of commercial paper, non-interest commercial paper? Of course, the market structure is there, the operational challenges that we've got in the market, and then we have structural issues, we have compliance concerns, we have the market development needs, and then regulatory environment, regulatory requirements. Yes, all of these 6 points are just, they are interwoven, but I would not necessarily have to go into them. But again, I would like to quickly touch on just 2 of them, the market structure issues. Again, if you look at it, the Islamic finance industry in Nigeria is trying to gain its development, and then it wants to ensure that it is ranked pari passu with the conventional finance. And that's how it's able to play practically or play properly with the conventional finance. Whether it's achievable or not, it has been tested in some other regions. So automatically we see this in, as a positive drive for us in Nigeria also. Again, the market structure issue is around the conventional commercial paper that is even available for institutional investors are purely interest-based. So when we talk about a commercial paper being purely interest-based, is the fact that it is just an IOU. So, and Allah has mentioned in the Quran that we should not trade in interest, but we can do what we can trade. Allah has forbidden interest, and then Allah has allowed us to trade in mutual consent. So what that means is, in Islamic finance, you are only positioned to do or to trade and not to earn from borrowings, to earn from exchange of money. So again, what has been done, or what the structure they have in the conventional commercial paper, is just an IOU, making money from money. Of course, we also, another point to add is the fact that there's a lack of structured ethical investment opportunities for short-term money markets. Globally, aside from Malaysia, that has a functioning and effective Islamic capital market where fund intermediation is seamless amongst participants of Islamic finance. Other countries continue to struggle to establish this Islamic capital market structure. So what that means is we've still not been able to have where we are able to have that, close the link for fund intermediation from seekers of funds and then those who are willing to have it. So we also have limited access to Sharia compliant liquidity management tools. So we've not got enough product that can be used to that will be used by institutions, by individual corporates to exchange funds amongst themselves. So these are the innovations that as Muslims, as players in the market, it is very essential for us to look at it and then establish this fully secured Sharia compliant instrument that allows for fund intermediation. And then, of course, absence of structural ethical investment vehicle for corporate building. So again, if you look at the existing commercial paper, it's always discussed that most of the funds that are being used are being deployed for borrowings, especially to support banks in their liquidity management obligations. However, using that for liquidity management instruments is not enough. It is not Sharia compliant on the side of the non-interest commercial paper. And then we'll continue to see why it is not Sharia compliant, because when we talk about Sharia compliant, people just believe that we're just only talking about prohibitions of riba or prohibition of usury, or what we call interest. But again, there are too many other prohibitions. There are other reasons, there are other underlying reasons why it is forbidden to trade in riba. And then, of course, Islam does not only give us prohibition, it has also given us what we can do. And then these are the functions of players in the market, established Islamic finance experts on the Sharia side and on the finance side, and even economics or even behavioralists that are able to establish or bridge the link between bringing out innovative products that support the development of the market. However, I'll just quickly move on to discuss what we understand, what key takeaways I'm willing to deliver in this session. Number one, I need you to understand what NICP means. What is non-interest commercial paper? Again, how does this differ from what the conventional commercial paper, and then the benefit of the non-interest commercial paper to investors? And then I'm going to also mention to you the non-interest commercial paper that is being offered by Trustbanc Group. Now, non-interest commercial paper is just an innovative financial instrument structured under the principle of ethical finance. Let's break it down. So there's the structural and then there's the structural framework. So again, we can as well have different contracts stemming out of all this, our Arabic jargon, wakala, murabaha, mudarabba, musharaka, and all. So all of these things are broken down into just three major part of major way of financing. We have the equity contract, we have the sales contract, and then of course we have the lease contract. But again, that alone will not they have their conditions, and then it must be in line with Sharia. However, the having talked about all the contracts, whether it has following the conditions and the principles, and then of course following relevant standard has been developed in the global Islamic finance market like IOFI and then IFSB, or probably you just have to adopt from other growing economy like the BNM standard and all. So again, in the case of non-interest commercial paper, I talk about the features. We need to establish a special purpose vehicle as as whether as an investment agent or probably the issuer or something. So this is just to ensure that there's bankruptcy remotency. That's on the one hand, and then to ensure that transactions are being carried out in line with Sharia. Number two, and then also to ensure that the investors are well protected, and then the funds are being utilized for their intended purpose. Again, it's also going to get involved in a clear chain of what custody of funds and investment. So major key players in non-interest commercial paper, we have depending on the kind of structure that you are bringing on board, we always have for example, if you deploy a Wakala investment like us, it's going to have investment agent. Sometimes it's also going to have a sub-investment agent. A sub-investment agent is just going to be acting under the instruction of the investment agent itself. Of course, there's a trustee, there's a note holder, and then of course, investors like you and I. The operating mechanism is going to be that the funds are going to be raised. I don't want to go into the technicalities, but again, let me just simplify it. There's going to be an SPV. Funds are going to be raised by this SPV. The SPV is what the investors are going to invest into. Then the SPV take these funds and send to do what? To the agent. The agent either directly invest in non-interest vehicles or ventures, or rather appoint a sub-agent who is well-versed with non-interest, who is able to identify the non-interest finance ventures, and then from there, it's able to invest into this project, and then returns are being transferred in the same way it has gone, and then up onto the investors. What are the this process that we have mentioned? You look at it from the fact that funds are raised, it has to be investment, Sharia compliant portfolio and assets. It's it's broader than the way we just talk about Sharia Sharia compliance projects. So when you some persons, the definition of Sharia compliant project are just that it does not have to be interest based. However, it is more broader than that. It's encompassing, it has to be free from gharar, that's uncertainty, that at least the investment or the returns on that investment has to have a clear cut on how, number one, is going to be returned, and then where those investments or where those returns are going to be generated from. So again, it has to be asset backed, in the sense that you cannot just take money and just give it to someone without having to understand where it's going to be invested into. And that's the clear cut between ethical investment and what Sharia compliant investment. A lot of people think ethical investment and Sharia compliant investment are the same. Yes, in some region it is mentioned, it is almost the same. But again, Sharia compliant investment takes a little above the ethical investment by not only investing in non-ethical investment alone, but also ensuring that the investment or the project, the asset, are what they are Sharia compliant. They follow the principles of Sharia, and then of course there are Sharia guidelines that are attached to this investment. Of course, the most important thing is the profit distribution, which has to do with the actual performance of the underlying asset. So as long as we have understood that the asset is what we are directly investing in, so it means that there is a need for us to look at the performance of the asset, the return on that asset, which would also be transferred back to the investors. I think I'm able to share a bit of the understanding around the non-interest commercial paper. I said it is short term. On the one hand, it is not like a sukuk that takes a duration between more than 1 year. above 1 year, and then of course between 5 years, 5 years, 7 years to cook here, we can have it. But for non-interest commercial paper, there are short-term instruments within 90 days, 180 days, 275 days, and of course less than a year. So what does this mean? It means that it's able to cater for that industry, for that investors who are willing to invest their idle fund and then of course meet their short-term requirements. So it means that there are some investors who have funds available but will be needed in the next 90, 180 days and all. But of course, they do not want it to leave idle. They also want to continue to earn returns on it. So it means that you can actually invest in these days. And then, of course, this is practicable in the conventional space. They do it a lot, and then it has fostered a lot of fund intermediation in the conventional space. I say to a lot that for we to have an effective Islamic finance industry, we need to continue to produce instruments that are going to be what that will enable fund intermediation among participants and players in the market. So again, the second key takeaway that we're going to be looking at is how we are kind of different from the conventional space. Of course, our investment approach is different. The risk sharing model is also there. The asset backing is also there. The governance structure is also there, and then the use of proceeds. Very good. Diving into this, this is going to be that the conventional space is, of course, is based on interest-bearing debt. As IOU, you give the issuer the money. The issuer promises you a particular rate, which is benchmarked with the market rate or London Interbank offering rate or whatever rate that is available. And then as long as it's attractive to investors, and then of course, NICP is not based on that. It is based on the performance of the assets. And then of course, for you to have that kind of asset, you must be able to ensure that it is able to meet the market returns so that it's attractive enough for investors. So, however, that does not mean that we are benchmarking with we have used the interest rate, but of course, because we currently play in the same market space, it is very important that we need to be attractive to the same investor that we're looking at in the market. So, of course, risk sharing model for non-interest commercial paper, it is linked to actual performance of the asset. And then, of course, risk is being shared. In Islam, risk and the reward goes together. That's the ideology behind ensuring that for you to earn reward, you must also take the risk. However, does that really mean that we should ensure we should be loose with capital, we should be loose with funds? No. So that's where the fund intermediation, the fund managers like Trustbanc is coming in to ensure that funds are deployed properly, and then the risks are being mitigated enough to promise higher rates and then to avoid loss of capital. So asset backing, yes, this is another important point where you can actually say that as investor, you are investing in a particular asset which can be seen, feel, and then be identified. So it means that you have a stake in a particular asset which is owned by the special purpose vehicle that has been created, and then that is what is going to protect all the investors together. Again, we look at the governance structure. Of course, apart from the regulatory structure that we currently have, even in the conventional market space, which is also governing the non-interest, like the SEC guideline, the banking guideline, and all. So non-interest commercial paper will take a further step ahead and then ensure that it is Sharia compliant, not only Sharia compliant, and then to ensure that investment or monies are invested into ethical and halal investment and portfolios. So, of course, use of proceeds is also going to be like that. We talk about the third takeaway today is around the benefit of the NICP to investors. So what is the advantage of NICP? Some persons will be wondering. At least there are mutual funds in the market. There are we've got CPs also. Why should we be looking at NICPs? And then what benefit is this to us? So I think I've broken down this into 4. Number 1, the ethical alignment. Number 2, the risk management. Number 3, the financial benefits. And then number 4, the market opportunities. So again, I think as ethical investment seekers, number 1, and the Sharia compliant, as Muslims that are backed by our faith, it's very important to understand that we are going to account for whatever finances that we have on the day of judgment. A very good example is what the Prophet Sallallahu Alaihi Wasallam had mentioned to Aisha, and then Aisha mentioned it to Abdurrahman bin Auf, one of the wealthiest Sahaba, that Abdurrahman bin Auf will be part of the last Sahaba that would crawl into Jannah. So, and then he was asked, and he asked why he would be part of those, because he would account for the amount of money that he held at that time. And then what led to this was just because of Abraham's bin house caravan that ran into Medina at that time, and then it caused a lot of noise, and people were wondering where's this caravan coming from, and then they said it was Abraham's bin house caravan. He had a lot of loads and goods, and then having heard that, out of the generosity of the greatest Sahaba, he donated everything to charity at the time. So this is just for us to have an understanding that it's not about how we are able to make profit, but again, what are we investing into, and then how are these profits coming back to us, and then how do we ensure that we differentiate ourselves, distinguish ourselves from interest-based banking. Again, let's not even go into that. If we look at the global financial pandemic that we've experienced in the past, it has been proven that those financial crises was a result of debt-based system, interest-based system, and all. Of course, non-interest finance is an alternative to this procedure. Even in the West, they've tried to adopt this, and then they are looking at a risk and a profit and loss sharing principles. Now, the advantage to modern investor is its ethical alignment. It's, of course, the investment is verified in an ethical project. Of course, there's clear transparency in the fund utilization, like I've mentioned earlier, and then there's alignment with personal and institutional values. It is a short-term investment. It's very difficult to see short-term investment that are Sharia compliant. That's one. Number two, because it's a Sharia compliant investment, the process of having to analyze product or analyze a project that will be in line with Sharia compliant is quite difficult. It's a long process. So this project is coming to bridge that gap, and then because it's a review and then a construction that have been done by experts to ensure that it is Sharia compliant, not only Sharia compliant alone, but of course there are really available assets and portfolios that people can quickly invest in, and then they can opt out at the end of this within the shortest period of time. Now, we look at the risk management objective also. We've tried to ensure that it's asset-backed securities, and then it has multiple layers of oversight. Apart from the risk management framework, the risk guides, it also has the Sharia guidelines, the Sharia alignment. It has been verified by our advisory committee of experts, and then it has been certified by external experts also to ensure that, to ensure the independence, to show that we have been transparent enough, and then it is in line with Sharia. Of course, we have a clear governance structure to this. The financial benefit is a competitive return for this particular non-interest commercial paper. It has a competitive returns alongside with whatever market rate that we have in the market. Of course, it's also a kind of it has the asset that we have in this basket of portfolio is has a very good diversification, and then it has proven that it is well structured, and then returns are adequate enough to pay back to investors. And then, of course, the access to unique investment opportunities. It gives you the aspect of investment opportunities. It is registered with the Security and Exchange with the FMDQ, and then this is a structured platform where instruments that can be traded. Of course, and then participation. Of course, we have two sectors, right? The financial sector and the real economic sector. So what we are saying here is we're not just doing financial intermediation, but we're also ensuring that we are investing in real economic sectors. So finally, we have the market opportunities. We need to also contribute to the growth of the Islamic finance market, and we can only do this by also investing in this market. We try as much as possible to bring back our liquidity from the conventional space and then invest them into this space. This we are contributing to the growth of the Islamic finance Islamic finance industry. Of course, it's also an innovation in the investment structures, and then it gives you access to emerging markets and sectors. So this is just to tell us that we are not going just structuring for asset alone, but also looking forward to businesses that are Sharia compliant that we can also raise funds for, and then it is a win-win situation, and then of course a symbiotic relationship among both investors and funds financiers or financiers. So again, what we the practical implication to this is it is ethical trade in finance, it is infrastructural development, asset financing, and then of course is able to assist working capital for ethical businesses. The resolution around the non-interest commercial paper we would that we have at Trustbank is number one, it has clear structure framework under the Al-Wakala Bil Istimar. Al-Wakala, this is investment agencies, just the term. So it means that the investors, you and I, are appointing Trustbank to invest in Sharia compliant assets, and then of course they will earn a fee as an agent, and at the end of the day pay back returns to us as investors. So that's it. So very clear and simple. So it means that the return on the asset is what is beneficial to us. The transparency of investment process, the robust governance mechanism. We also have the clear asset linkage, so there are no gaps. So it is not that the asset that is we're actually investing in real assets, existing assets, and then of course the standardized documentation, we have them, and then we have competitive returns and the clear profit distribution mechanism and the multi-player oversight. To close this our NICP represents more than just an alternative investment vehicle. It's a testament to how modern finance can adapt to meet both ethical requirements and profit objectives. As we continue to innovate in this space, the opportunities for meaningful investments without compromise will only grow. To quickly discuss the term sheet, the issuer is Saltiva, which is the SPV that I had mentioned. The originator is Trustbank Holdings, who is acting as a sub-wakil. We have the Sharia advisor here, is a known in the industry, is Mabu Capital Limited. And then the size is 20 billion, and the issue size is up to 4 billion at this time. We have the series 1 and then series 2 for this particular issuance. The series 1 is 180 days that allow you to invest your fund for 180 days, and then after the completion of 180 days, you'll be paid back both your principal and profit. And then the other one is 266 days, which is the series 2. So again, for various reasons, long-term investment are able to attract more returns than short-term investment. So the longer you stay, so automatically the expected returns is 23% and 25% respectively. And the offer has been opened on the 24th of October. The offer closes on the 31st, and then the offer opens at 6th of November, and then it's going to close at 7th of November. The settlement date is 8th of November, and then the issuer's rating is A1. That's a very good one for those that understand what rating means. And of course, the original rating is A1 from Data Pro and then BBB from GCR. The series of these proceeds is that the net proceed will be used to invest into non-interest financing ventures, and then the minimum subscription is 5 million and multiples of 1,000. Tax consideration is also going to be applied. Yes, you can reach out to my colleague, Temitokpe, and then Rukayat Mutiu for further inquiries, and then you can also reach out to me for more information. Thank you for your attention, and then I'll take questions.
Thank you very much. Thank you very much for being very explicit on Islamic finance, the NICP non-interest commercial papers. You specifically told us that yes, there are quite a lot of ethical investments. I mean, there are quite a lot of investments, but there's sure a difference between ethical investment and Sharia compliance. Sharia compliance investments. You said Sharia compliance investments are investments that are quite explicit. They have their own clear terms. They tell you where you're putting your money into, what rate those investments are going to be bringing back, what you're going to be getting back from that. And so there are quite a lot of, there are quite a couple of questions in the room here, and I'll start reading each one of them right now. So one of them is, how do we access prospectus. I think that has been answered. And then the next one is, what's the maturity date of the NICP?
So thank you very much. Like we said, it has a tenor. So there's it, and then of course it's broken down into 2 series. So you either invest in one of the series, right? Or you can take the 2 series for different investments. So what we're saying is each of them would take the first series is 180 days, and then the second one is 288 days. So starting from the offer opens at the 24th on the 24th of October, and then it closes 6th of November. So investment starts from the day and for the next 180 days. And then this is the same case for the series 2 also.
All right, great. I hope that answers your question, Abdullah. Okay, also another question is, can you give the difference between conventional CP and NIT? I think you've answered that sort of, but I'll still allow you answer that again.
Okay, so of course we have a lot of differences in it's just them around why what's the difference between Islamic finance and conventional finance. Again, to be specific, so that we don't have to go into too many details, right? They are both short-term investment, right? And then in Islamic finance, it's kind of difficult to have a short-term investment, you know, that spans between a real asset that will allow you to invest for just for that particular day. I'll give you an example. If you're actually not investing in commodities that are traded daily, and then of course it yields better returns, you might not necessarily have to get assets that would fit into short-term investment. So that's where the problem lies. So again, it has allowed more innovations to ensure that they are readily made assets who are currently generating returns. And then that's why for Trustbank, we've used the Al-Wakala Bil-Istimar to ensure that we are investing into a revenue generating asset. And then of course, returns will be paid back to investors. So going back to the conventional CEP, so what do you do is if you invest in them, you are most likely investing in an interest-based instrument. Again, it could be that the issuer is willing to support its working capital. That's on the one hand, or probably to support his financial needs as a bank. So what that means is probably the bank is not able to meet up his liquidity needs. It's just going to go into the market, raise funds, and then of course promise investors certain amount of returns or interest. So what has that done? You are not able to say that you have invested in particular assets rather than borrowing people money and then getting returns or getting interest in returns. So basically that's the difference.
Great. Thank you for answering the question. Obashala has his hands raised. Obashala, you have questions, please ask. Go ahead. Obashala. Yeah, you can unmute and ask your question.
Okay. Okay, thank you. Thank you, Mr. Ajani, for the beautiful question. My questions is in three folds. Number one, I want to ask about tenor matching, because most of the projects that you have in the market today are long tenor in terms of creation of assets. But the CP seems to be a short-term investment outlet. How do you match the difference in tenor? That's one. Two, there is likely to be a lag between the time you mobilize the fund and the time that you apply the fund. What happened within the lag period? Then three, I want you to talk about your experience in terms of return on similar product or investment outlet that you have created before, so that we know what one will be going into if one is interested in it. Thank you.
Thank you for that question. I'll take you one after the other. The first question is trying to differentiate between um um okay, let me start from the last question, the mismatch. Yeah, so again, um it is understandable to say that raising a short-term fund for a long-term project could cause liquidity mismatch. And then with that, it's going to affect repayment to subscribers. However, that is one of the role of the fund manager. That's on the one hand. On the other hand is the fact that as a fund manager, part of our role is to ensure that we have asset match. And then when there are cost overrun or time overrun, it is important that as managers we bridge the gap. That's one. That's another one. Again, like I mentioned in my presentation, it's always very difficult to see short-term assets that will allow these short-term fronts. So liquidation could be a problem. However, what we have done differently is to ensure that the assets are already existing and then they are revenue generating assets. So you are investing into the portfolio. What you're doing in essence is the SPV is buying over the asset for that period, which would also be sold back to the issuer. That's on the one hand. For on the issue of returns, yeah. Again, if you look at the way returns have been growing in the past years, we realize that for us to be competitive, also we need to create assets that are promising competitive returns. So in our selection process, it's very important that we look at this asset that will be able to meet the market returns. Again, market returns. So what that means is we're not just looking at the going market rate, but also how the asset is able to perform better than the ongoing market return. And then of course, they are the risk, they are the return. So automatically we are trying to ensure that there's a balance between getting competitive return, secured assets, asset-backed assets, and then creating asset-backed instruments, and then also promising competitive returns. Do you want to remind me of the third question?
Yes, I asked that it's likely to be a gap between the time you raise the fund and the time you apply the fund. How do you manage
Okay.
the fund in the interim?
Okay, that's quite clear. So again, so if you looking at what I've explained earlier in terms of the asset themselves, so we have analysis, we have a risk framework on the entire asset basket that we have. So like I said, they are already existing assets, and then they are revenue generating assets. They've been packed as a portfolio to be invested into. So automatically, what we're saying is the portfolio is willing to share returns with the investors. However, the investors are going to benefit from the return on the asset, the direct asset itself. So again, as long as we have our time schedule, so automatically we continue to have is able to quickly match the asset, the timing of the development of the asset, because the asset is already developed. So there are no gaps that has been created in this time because it's already been taken care of as part of our risk framework.
Thank you very much.
Yeah, I hope your questions have been fully answered.
Yes. Thank you.
Thank you very much. Okay, so someone with the name Galaxy02 asked the question. He said, just like in conventional TP, the security fund is as good as the rating of the issuer and strength of the liquidity. What is the fallback in case of inability of the issuer to perform? Should I go over the question again?
Please do.
Okay, great. So he said, just like in conventional TP, the security fund is as good as the rating of the issuer and strength of the liquidity. what is the fallback in case of inability of the issuer to perform?
Okay, thank you very much. I think that question has also been addressed, but I'll try as much as possible to be more explicit on this. So again, ratings for in the conventional space, the investors are informed. They make their decision with the particular rating of the issuer, which of course is informed by the liquidity, the strength of the liquidity, and the utilization of the asset of the fund. However, in the case of ours, yes, these are also going to be existing. Of course, we have good ratings as mentioned in the prospectus, but we also have fallbacks, right? We have backups for ensuring there are the redemptions on the one hand, of course, payment of profit as a when due. So this is where the issuer comes in. If you look at the Wakala structure, there's the Saltiva, which is the SPV issuer. There's Trustbank, the agent, there's sub-agent, right? So these so these guys, the three participants are able to perform their roles, and then at the end of the day, the sub-agent would ensure that there is a sale of the assets to ensure payback into to the investors. However, where there are instances where they are going to where there are lags in terms of repayments to investors, of course, the trust bank is able to pay or to buy the asset on behalf of the investors, and then the payments are going to be made to the investors. So it's a whole concept, and then it's fully secured in all the processes.
Okay, great. I was struggling with my mic there. So another question, I think the last question says, how often does the company create a SIP?
Yeah, so depending on the liquidity need, we of course, we intend to come to strengthen the market with the numbers of issuance. Again, like I said, it is the amount of liquidity instrument that we have in the market that strengthens and then develop the market. So what that means is if we do, we are committed to come to the market with positive attractions from the investors. So the more we see this, of course, we have enough asset that we are able to finance, and then of course, that's been reviewed by a Sharia compliant advisory committee of experts, and alongside our robust risk team to ensure that we're able to meet up with this. So, however, this is an innovative product. It's the first of its kind in the market, non-NICP. And then, of course, we are committed to continue to come to the market with this issuance as deemed fit. So the performance of this will also quickly inform us of the next time we're coming to the market, and then we hope to come to the market every 3 months.
Great, great. Thank you very much for being very explicit on these questions. I believe our audience have been thrilled with the explanations that you've given. And I believe it has also given quite a lot of clarity to questions that they've been struggling with. So also, like I said at the beginning, we have some dignitaries here. The Executive Director on Investments, Aziz Lawal. We also have some other people here. We have Temi Tokwe here. Wait, hold on, please. Yeah, we also have some very, very important people here. So I believe those people have some other things to say. If they have, please, I want them to kind of clarify.
Sorry, please, can I ask a question?
Oh, okay, great, great. Please ask your question.
I think there was a time I requested if Trust Bank have non-interest product, but I think the response I got then was like maybe a lower percent non-interest product. So, but now, if is it, but so far that I was on the meeting, the network has been fluctuating. I couldn't hear clearly. I was just venturing out and coming in. So I do not really get all of the messages. Though I would take my time to go through the recording. But for the sake of the question and answer section, I just said, let me quickly ask if that, how does it work? Because I do not really get, I'm sorry, I do not really get all of the message at all.
Okay, great.
It seems my network is just stable now, and I'm able to just hear you clearly.
Oh, well done. So the recordings are definitely going to be sent, and if there are questions, we will create a we create an avenue for you to be able to reach out to the representatives of Trust Bank. Okay, someone has another question, Infinix X669. So please ask your question. Please unmute yourself.
Assalamu alaikum.
Wa alaikum salam wa rahmatullah.
Assalamu alaikum. Can you hear me,
Wa alaikum
please?
salam. Yes, we can. Yes, we can.
All right. So my question is, first and foremost, thank you very much. Thank you to Trustbank. Thank you to the facilitator. Thank you for this wonderful program. Let me just go straight to my question. Given the amount and the minimum amount, say 5 million, is there an alternative, like a product, to accommodate lower end investors in terms of a structure, like a nominee structure, or is just straightforward 5 million minimum investment? Given that it's probably a new product, which I must commend the company for organizing this sort of product, given that I believe if we continue on this trajectory, it's going to be good for the Muslim community. So that my question is just, do you have structures to accommodate, like nominee structure to accommodate lower investors, or investors with lower capital, so to speak?
Okay, thank you very much, brother. So we understand that the minimum entry level would also best address high retail customers and of course institutional. But again, what we've done differently is to ensure that we accommodate retail customers also. So again, we would drop our contact, Rukoyat and Temitope would best inform you of how you can come in with any amount of investment that you are willing to do, and then they will help you register, and then you also benefit from the returns, the competitive returns that is willing to offer here. I'm hoping that
Thank you very much, sir. I hope that has been answered. Any other question before I bring in Temitope Osman and this require?
Check the chat box, please. I have a question.
Okay, great. Yes, there's a question from the chat box. It says rather, could you please clarify the difference between profit rate and expected rate of return? Besides, what type of sukuk is it? He apologized for coming late. So I know you've clarified that part of the question before, but please.
Okay, so I just want to try and analyze the question so that we're on the same page. So the question is trying to differentiate between
Profit rate and expected rate of return.
Expected rate of return. Okay, so again, if you look at it, the profit rate is actually is trying to differentiate is the rate on the investment, you know. So, however, I'm going to be more I need to explain this in a way that you're able to understand this so that it doesn't look like um an interest-based system. Now, because of the asset revenue generating asset, and then the performance of the asset is based the return on the investment is based on the performance of the asset. So at this time, we can't not tell what the investment is, the profit rate will look like. But again, just to be able to accommodate the high level of uncertainty or low level of uncertainty, so it's best to have an expected return. So of course, what that means is you would not have too many gaps, you know, in terms of what you're expecting as investors, and then you'll be able to know that your investment would promise you not less than this. So it is from the fund manager to explain that this is what we have at the end of the investment. That is why we have expected profit rate. However, the profit rate at today is as at the time the investment is being kicked off is what we have informed you around that's the profit rate. But again, just so to have an understanding of what to expect also is what is referred to as expected rate of returns.
Yes, he also asked the question. He said, what type of sukuk is this?
Okay, so again, like I mentioned, this is not sukuk. It is a short-term instrument. You can also say it's a short-term sukuk, depending. So they are all financial instruments. The difference between them is just that for sukuk, it is more than 1 year. Usually sukuk are always more than a year. So, and then of course, up until 5, 7, and 10 years. But non-interest commercial paper are short-term instrument between 90 days, 180 days, 360 days, and less than 360 days. So that's how we have it. They follow the same structure like you have explained in the course of the discussion. And then of course, they are both asset-backed. They are going to be structured in line with a particular Sharia compliance, Sharia contract. And then, of course, they have the same risk and Sharia governance framework to ensure that it is Sharia compliant. Yeah.
Right. So thank you very much for extensively talking about this. I'll be inviting Muti Rukayat now to help us talk about how
Sorry,
to.
sorry. Um, sorry, are we together? Sorry.
Oh, okay, great. Yeah, your question.
Sorry, thank you very much, the facilitator, sir. I'm not so clear because I came late. So I understand now that this is the commercial paper, right?
Yes, yes.
Hello? Oh,
Yes,
okay.
yes, yes.
So could you please clarify because seeing profit rate and expected rate of return, raised a concern that okay, what would be like the underlying Islamic finance contract that may justify having a profit rate and still expected rate of return. For me, the profit rate, I don't know, maybe it's Murabaha, something like that, or the expected rate of return may be talking about the Murabaha. I don't. Could you please clarify that? Thank you.
Yeah, thank you very much. I think these are just concepts, and then they are not attached to any kind of contract. So we need to be clear on that. That's one. Number two, you mentioned specific contract, right? When we talk about fixed return contract, like Murabaha, of course, that's so clear as to the amount of returns. So it's just me trying to say that you buy something today at a particular amount and then you're willing to sell to somebody in the future. So automatically, so if you buy at 100 and then you're willing to sell at 120, it's 20%. So it's so clear cut. It's 20% ROE. So there's no expected rate of return in that case. So In the case of assets that are revenue generating on the one hand, it is not buying and selling, they are investment assets. You will definitely have expected rate of return because the return on those assets are not established as at the time you were going to the market or you're raising the funds. So it is very important, even from the Sharia perspective, to manage investors' expectations so that they have an idea. It doesn't just go loose to the extent that they can just we can just come up to say that this is investment, this is what you should be this is the profit rate. However, we are given the gap to say that the expected rate of return on that investment is this, even though the profit rate that we are able to estimate at this time is this. So it differentiates the clear cut at this time. Like I said, it is only contracts that are sale bills, fixed income based, that you can actually talk about fixed profit rate. Of course, we both have fixed profit rate in Islamic finance and also variable profit rate in Islamic finance. These two are existing. So it is not just one way.
I hope your question have been answered.
Yes, thank you very much, sir. Thank you.
All right. So again, like I said, I will be inviting Muthiru Rukaya to talk about other ways to invest in Trustbank, like Trustbank investment here. I hope she's here. Walaikum salam.
Thank you for bringing up this program, and I thank all our audience too for their active participation on this call. Okay, I'll just be giving us a brief
I'm sorry. Okay, great.
I guess it's my network.
Yes, I believe so too.
Okay, I'll be taking us through other ways we can actively participate in this investment. Okay, fine. The minimum threshold for this investment is stated at 5 million naira. However, just like someone asked on the call, that how can we accommodate the other investors that does not really have up to the threshold, like in terms of maybe a nominee account or something. Okay, so what we've been able to come up with is for us to pull the low funds together and invest it in bulk. So that means it will be like a pool fund. Like, okay, you have a 500 here, 1 million here. At the end of the day or at the close of the offer, we bring whatever we're able to gather together, be it from maybe 20 investors, 30, as the case may be. We pull it together and invest it as a whole. So at the end of the tenure of the investment, the expected return, the profit is not going to be different from someone that brought in maybe 100 million, 200 million. No, it's going to still be the same expected rate of return, which means that whatever we're able to get as a return will be distributed equally among the investors based on the amount they invested. So with this, we can say, so if you have your maybe 500,000 naira, 1 million, we are happy to accommodate you in this. So to get more information on how you can get onboarded, you can call any of the contacts that we have underneath the flyer for further information in this regard.
Thank you very much for giving information about that. Thank you very much. I'll also be calling Temitope Osman, who's the risk manager for assets management, for Trustbank Asset Management Limited to, further buttress the level of risk people are going to be taking. So, when people want to put their money into a business or an investment, they want to be rest assured that, yeah, there's less risk involved. So, Temitope Utsman is going to be talking about this, to further give strength to what people have heard from the earlier speaker, Ibrahim Ajani.
Okay. Thank you very much, Murtado. Assalamu alaikum warahmatullahi wabarakatuh.
Wa alaikum salam wa rahmatullahi wa barakatuh.
Yeah. So just like my colleague has said, Tunde Ajani, Ibrahim Ajani. So the underlying asset was carefully reviewed through our investment risk framework, and all risks have been carefully mitigated. And also, it's also worthy to note that on the basis of unlike the conventional aspect of investment, whereby you might not really know what you are really investing into. So on this NICP is transparent. The assets we are investing into is something you can see yourself, and also all information you need to know about the asset is also that been put together for you to also look at. You can as well see the level of where the asset has gotten to, and also all what our mitigants we are in terms of the project that we are going to be that have been put in place is also carefully transparently stated in the prospectus and other document that is going to be shared, that has been shared, or that is available for you online to review. So basically is a transparent form of investment that whereby is something that you can see, and so that's basically what I want to say, that it's not hidden investments. It's not that you are investing in what you don't know. It's something you know, and it's fully Sharia compliant, whereby it's also articulately reviewed by our advisory committee of experts as well, and it has been certified Sharia compliant also. Thank you very much.
Thank you very much, Temitope Osman, for that reassurance. So one thing, for those who missed the introductory part of this conversation, you would understand that whoever is coming on board here, whoever you are entrusting your money to here at Trustbank, are people who are very good at what they do. I can't just go over I can't go over the information again, but I would have just read out the bios of the speaker and some of the participants here. You should also understand that, thank you very much. Thank you very much here, Saba. Saba says that, Dr. Ajani, I love how you broke down the complex financial concepts into actionable tips. You're a fantastic speaker. One thing we should also understand is the fact that when people are so good at what they do, it makes it simple to people who do not know what it is. So thank you very much to the fantastic experts that we brought on board here. And I hope people will be looking forward to investing their money and entrusting it into this investment. We will be dropping the flyers and details for you to contact them at Trustbank. We'll also be, if possible, we'll also be dropping the recordings of this video to the platforms where we sent the invitation links. We'll also send the flyers and information to people who are interested. Thank you very much for your time. Thank you very much for giving us this wonderful information on how to diversify and invest. Thank you. Thank you, Temitope Osman. Thank you, Rukayat Mutiu. Thank you to Aziz Lawal. Thank you very much. Thank you again, Ibrahim Ajani. Thank you. Assalamu alaikum wa rahmatullahi wa barakatuh, everyone.
Thank you very much.
Thank you very much, Brahmatara. Appreciate it.
you.